Markets have been in a rough spot lately, with most of the recent gains wiped out. But the fact that you're still here in the crypto trenches tells me something important. You're not just here for quick flips. You're here for the long haul. Because today's discussion could be one of the most important videos you'll watch this cycle. In this breakdown, I'm going to share my tried and tested formula for exiting altcoin positions. The same framework I've refined across multiple cycles to protect profits and avoid falling into the trap of holding bags down 90%. I'll also walk you through my overall crypto exit plan for this cycle, with the exact metrics and signals I'll be watching. This isn't hype, it's not moon math, it's the kind of grounded, data-backed approach that helps you survive in this market. Because the biggest risk in crypto isn't rug pulls, scams, or even whale manipulation. The biggest risk is not having an exit strategy. That's what separates professionals from the majority. I learned this lesson the hard way during my first bull run in 2017, when I watched paper profits evaporate into dust. Since then, I've studied every cycle, refined my process, and built strategies that work whether we're talking Bitcoin, Ethereum, or the riskiest altcoins out there. So here's what we'll cover today: where we are in the current Bitcoin market cycle, what to expect in 2025, based on macro and on-chain data, the key charts that I'm watching for exit signals, my personal crypto exit plan, 3 exit strategies you can copy: conservative, moderate, and aggressive, the psychology of selling, and why execution matters more than theory. Let's dive in. Bitcoin runs in roughly 4-year cycles, largely shaped by the halving. Each halving cuts the mining reward in half, reducing the flow of new BTC into circulation. This creates a supply shock. But as Bitcoin has matured, each halving impacts a smaller percentage of the circulating supply. Historically, the pattern looks like this: a year of post-halving consolidation, where price grinds up and down without major moves, followed by a parabolic bull run, typically lasting 12 to 18 months. Then, an ugly bear market drawdown, often 70% or more. Now, here's where we are today. We're about a year past the 2020 for halving. If we line this up with history, this is usually the point where the market transitions from consolidation into the true bull run phase. Let's look at the past. After the 2016 halving, Bitcoin consolidated for a year, then exploded to $20,000 in December 2017. After the 2020 halving, it chopped sideways for months, then ripped to $69,000 by late 2021. If history rhymes, the 2020 for halving suggests the peak window could be mid to late 2025, specifically around September or October, roughly 17 months after halving. On-chain data supports this. Exchange reserves are at an all-time low, just 2.2 million BTC left on centralized exchanges. MVRV-Z score, which compares market value to realized value, is sitting at 1.7. That's nowhere near the 7 level we see at cycle peaks. Google Trends for Bitcoin, still flat compared to 2021 mania. Retail hasn't arrived yet. Some argue the $109,000 high from January 2025 was already the top. But I'd call that a mid-cycle shakeout. A 30% correction fits perfectly within historical bull market behavior. In fact, in 2017 and 2021 we saw multiple 30 to 40% dips before the final euphoric blow-off top. So my take? We're in the belief phase, past early optimism, not yet at euphoria. The stage is set for one more explosive leg higher into late 2025. To understand Bitcoin, you have to understand liquidity. In every past cycle, liquidity injections lined up with Bitcoin's biggest rallies. In 2013, post-financial crisis QE sent Bitcoin to $1,000 before taper talk triggered the crash. In 2017, ultra-low rates fueled the run to $20,000 before the Fed began hiking. In 2021, unprecedented pandemic stimulus printed trillions, driving the run to $69,000, which ended the exact week the Fed announced tapering. Now in 2025, the setup is unique. We're not in easy money conditions yet. The Fed is still running tight policy, but signs point to multiple rate cuts ahead. Treasury Secretary Kashkari has already hinted that tools for liquidity injection are ready if needed. Add in the fact that trade tensions are easing, global growth fears are softening, and we could be on the cusp of a liquidity shift. And in crypto, when liquidity floods back in, that's rocket fuel. To time exits, I'm tracking 3 main charts. Bitcoin dominance, currently around 63%. Historically, dominance falls during the late bull run as altcoins rally harder. In 2017, it dropped to 35%. In 2021, to 40%. If dominance dips under 50%, alt season is in full swing. Total altcoin market cap now tilled $900 billion. In 2021, it peaked at $1.8 trillion. A break above $1.5 trillion with strong momentum would signal a late-stage melt-up. If it pushes past $1 trillion, that's a clear sign. We're near cycle peak. MVRV-Z score at 1.7 today. Tops historically come above 6 to 7. When this approaches those levels, risk skyrockets, and I'll start aggressively scaling out. Here's how I'll play it. Begin scaling out when BTC dominance falls below 50%. The signal altcoins are running hot. Once total altcoin cap breaks $1.5 trillion, I'll trim 20 to 30% of my higher risk alts. If MVRV-Z score hits 6+, I'll accelerate exits. That's peak euphoria. If Bitcoin itself breaks $1.4015 OK by Q for 2025, I'll start taking profit in structured chunks, rotating first into BTC and ETH, then into stablecoins. To simplify, I use 3 exit strategies depending on the risk level. Low risk strategy: pull profits early at 50% gain. Take 75% off the table. Leave 25% as a moon bag. Great for large caps. Moderate strategy: at 100% gain. Take half off. Leave 25% in the project. Rotate 25% into another opportunity. Balances safety with growth. Aggressive strategy: at 150% plus gain. Withdraw your principal. Spread the rest across multiple plays. Higher risk, higher reward, best for Dagon plays. These approaches protect profits while still leaving upside exposure. Here's the truth. The hardest part isn't picking a strategy. The hardest part is sticking to it. Most traders fail because they let greed convince them that this time is different. They screenshot portfolios at peak, but never take profit. Months later, those gains vanish. You must respect your own plan. When your exit signal triggers, act. Don't second guess. Don't listen to Twitter hype. Don't fall into the one more pump trap. Discipline beats emotion every time. We've covered a lot today. Where we are in the cycle, what to expect in 2025, the charts to track, my exit plan, and the strategies you can copy. The bottom line is this: crypto bull markets are where life-changing money is made, but that only matters if you actually secure those profits. Without an exit plan, you're just another bag holder waiting for the next cycle. So build your strategy now. Decide how much you're willing to risk, how much you need to cash out, and which signals will trigger your exits. Then execute with discipline. If you found value in this breakdown, hit that like button. It really helps the channel grow. And if you want more no hype, data-driven crypto analysis, make sure to subscribe so you never miss the next update. Now, over to you. What's your exit strategy? Are you aiming to scale out gradually? Or are you riding it all the way until peak euphoria? Drop your thoughts in the comments. I always enjoy reading different perspectives. Thanks for watching, and I'll see you in the next one. Stay disciplined, stay strategic, and may the gains be with you.